Yes, just a minute. So let's begin the income tax paper analysis. Fantastic paper. I can say 6 to 7 out of 10. I have to give here two types of ratings. Those who studied agriculture income and PGBP clubbing provisions thoroughly. For them, I can say it is easiest paper. Those who ignored agriculture income and PGBP, those who have not performed well on PGBP, for them it is 7 out of 10. But as a whole, I can tell you the paper was a very not so difficult paper. And you know what? Yesterday, day before the exam, I did one total income problem. All the checkpoints were tested. You remember the first one, inside that agriculture income concept I specifically spoke on. Market value, how to consider agriculture produce, sugar cane, sugar. Remember, you cross-checked day before yesterday. The same was asked for 6 marks MCQ. Remember, agriculture income was asked for 6 marks income, which was unexpected completely. And I specifically day before exam, I made a video on that. You can cross check the first video. Like, look at this directly. Case scenario 3. Mr. Anant is a farmer who has inherited 35 acres of rural agriculture land, which is 20 kilometers. 20 kilometers obviously is a rural land. He is cultivating 15 acres for paddy, which is directly taken by rice trader. Another 10 acres of land is used for growing sugar cane. As per the practice, sugar cane is purchased by sugar mills. Fine, whatever it is. Remaining area is cultivated for mulberry leaves, and part of the mulberry leaves are used for feeding to silk worms and getting silk cocoons and selling these silk cocoons in the market. Remember, mulberry leaves is an agriculture produce, paddy is an agriculture produce, getting it? Sugarcane is an agriculture produce, but sale of silk worms is not an agriculture produce. This is the first and foremost point. During the financial year 23-24, Mr. Anand had got net income from paddy. What is net income from paddy? 4 lakhs. This is agriculture income. 3,50,000 net gain on sale of sugar cane. Net gain on sugar cane. Sugar cane is also agriculture income. That is also agriculture. Remember, net means after cultivation expenses. Agriculture income means after cultivation expenses we should take. And 75,000 rupees by selling mulberry leaves. Mulberry leaves is also agriculture income. So this is also agriculture income. And remember, he carried out mulberry silkworm production using his mulberry leaves worth 50,000. Oh, another 50,000 worth of mulberry leaves were there. Remember, which means here already 75,000 worth of mulberry leaves he already sold. Another 50,000 rupees worth of mulberry leaves he hold it, like he is having mulberry leaves in his hand. Okay, so that what is he using mulberry leaves? He carried out silkworm production. How much worth of mulberry leaves were used? 50,000. Remember, in the previous day before agriculture income concept, I told you usage of agricultural produce for some further production, further process. That usage is also treated as agriculture income. Market value of that agriculture produce used is treated as agriculture income. So this 50,000 is also agriculture income. What is the total agriculture income? Very simple. From paddy 4 lakh and 3 lakh paddy 4 lakh. 3,50,000 sugar cane. Sale of silkworms, sale of mulberry leaves is 75,000. 50,000 rupees worth of mulberry leaves used in producing silkworms. So which means 8,75,000 is the total agricultural income. This is the main point. Now, and how to calculate business income? Business income means what? Now, what happened after this? Selling the silk cocoons by spending 2 lakhs and got how much? 3,75,000. So 3,75,000 is the total silkworm sale. For that, he spent 2 lakh worth of rupee for selling it. Yes or no? Some further processing, all that. And 3,75,000 he got after incurring 50,000 worth of mulberry leaves. 50,000 also you should reduce is equal to 3,75,000 minus 2 lakhs minus 50,000 is equal to 1,25,000 is the business income, which is actually non-agriculture income. That's it. This is the answer. Now, question number 9. Based on the above information, answer the following 3 questions. 9, 10, 11. For some of you, it might be 1, 2, 3 also. Depend because case this MCQ booklet, no shuffling will be there. Yes. Next. First one. Oh, entire amount of agriculture income, wrong. Agriculture income will be 8,25,000. In our answer, 875, wrong. Agriculture income will be 875. Yes, in our answer it is matching. Whereas non-agriculture income will be 125. Yes, in our answer it is matching. The answer is C. Since Anant mixing agriculture activities with non-agriculture, the entire residual, no, that is wrong. Agriculture income 825, no, that is wrong. So the answer for this question is C. Agriculture income is 8,75,000. Non-agriculture income will be 1,25,000. Next. 10th question. Paddy 4 lakh alone is exempt. That's wrong. sugarcane 3 lakh 50, paddy 4 lakh will constitute. Not only that, even silkworm sale, mulberry leaves 75,000, mulberry leaves used 50,000, that is also agriculture. Sale of mulberry leaves amount to 75, paddy of 4 lakh, sugarcane no, paddy of 4 lakh, sugarcane 3 lakh 50, use of sale and use of mulberry leaves 1 lakh 25. Perfect. The answer is D. So the answer is D, and I hope every one of you are able to getting it. Paper was easy. I can say those who have studied correctly, especially those who have attended the day before live, whatever I covered, only they have come exactly. Then the sale of mulberry leaves 75,000 will not constitute. That's a wrong statement. Sale of mulberry leaves is an agricultural income. The amount of 3 lakh 75 being sale products of sale cocoons to silk cooperative will constitute. That's wrong. Net income from production of silk cocoon 1 lakh 75. No, it is actually 1 lakh 25. Net income from sale of silk cocoons is 1 lakh 25,000 and will not be treated as agricultural income, will be taxed under IFOS or PGBP, whatever it is. Correct. So the answer is D. That's it. 6 marks. How much time we solved that? 6 minutes approximately it happened. 6.5 minutes it happened. 6 marks question into 1.8 minutes. Generally we have 11 minutes time. Okay, 10.5 minute time. Then another case. Mr. A transferred house property to his wife in the previous year 23-24 for inadequate consideration. Okay, so Mr. A transferred house property to wife for inadequate. Remember, inadequate consideration means deemed ownership will apply. Getting it? House property transfer to deemed, transfer to spouse, deemed ownership concept will apply. Accordingly, the income is taxable in the hands of the transferor. 27. Inside that clause 1 is there, right? That one. She received a rent of 2 lakh from letting out the property and spent 4,800. So 2 lakhs is gross annual value. Municipal taxes paid 4,800. So net annual value minus 4,800 is equal to 1,95,200 minus 30%. Let's see interest amount. She deposited the same with the bank and earned based on the above. So that means case study is over. 1,95,200 minus 30% is equal to 1,36,640 is income from house property, is directly transferred in the hands of the husband who actually transferred. In the A hand it is taxable. Later what happened, you see. She deposited the same with the bank. What she deposited? Whatever the rent she is getting, she deposited in the bank and she earned the interest of 15,000. We all know in clubbing provisions, in accretion to the asset, accretion of the income on the asset transfer is not subject to clubbing. Only rent is subject to clubbing, if at all clubbing is applicable. But here of course it's house property, so as per 27 anyhow we are clubbing it. Under 27 also it's like a clubbing provision only, so anyhow we are clubbing it. 1,36,000 is taxable in the hands of Mr. A. 15,000 rupees interest is getting, right? She deposited with the bank, interest is getting, right? That is taxable in the hands of Mrs. A only, because that's an accretion to the income, accretion on the asset transferred. Now based on the above information following 12 to 14, if Mr. A transfers the above property for inadequate consideration, oh my god, okay, if the above property is transferred for inadequate with an agreement to live apart under 27 deemed ownership, this is exception. In an agreement to live apart, if the house property is transferred, transferor is not treated as deemed owner to whomever we transferred in her hands. So wife hands only it is taxable. Now then income of rent, interest will be taxable in whose hands? In whose hands rent and interest income will be taxed? Rent will be taxed in the hands of wife only. Interest accretion is also taxable in the hands of wife only. So Mr. A nil, correct. Mrs. A 1,36,000, correct. Yeah, 1,36,640 under income from house property and 15,000 from IFOS. The answer is A. Mr. A nothing is taxable. Mrs. A 136 and this one. Mr. A 2.15 wrong. Mr. A wrong. Mr. A wrong. That's it. The answer is A. For this question, the answer. Remember, for you, the MCQ number might be different. The same question might be some 4th MCQ or 7th MCQ. We don't know. Getting it? Next. The income of rent and interest will be chargeable in the hands of. So general question, forget about one. Normally interest income of rent, in whose hands it is taxable? Mr. A 1,36,640 under I income from house property. Wife 15,000 is taxable under other sources. So which means D. That's it. This is what the original answer which we understood when we read the case study. Then if Mrs. A invested this rent amount in a business, if the wife invested this rent amount in a business and incurred a loss of, just a minute, I hope everyone are able to hear everyone are able to listen to the voice, everything. Yeah, fine. Yes, if Mrs. A invested this rent amount in business, remember I transferred a house, on that she is getting rent, that rent she is investing in business. Similar, see, whether she keeps this rent amount in fixed deposit, bank deposit, or invest in business, that's an accretion. That's an accretion concept that is not subject to clubbing. So if Mrs. A invests this rent amount in a business and incurs a loss of 20,000, she has income from other business which is 4 lakh. By the way, those of you who are having exam from tomorrow, you can absolutely leave it. Okay, I thought of giving you the disclaimer the first itself. It's absolutely your choice, because there are many students who are asking us on Telegram, sir, please give us answers, please give us answers, please give video on this. So because it's always a majority students, you know, requirement is what we consider. That's it. If Mrs. A invests this rent amount in business and incurred a loss of 20,000, she has an income from business which is 4 lakh. The income of rent and the income of rent and business will be taxable in the hands of. Income of rent is taxable in the hands of husband. Remember, rent is taxable in the hands of husband because transporter is deemed owner, and business will be taxable in the hands of wife only. Now, how much is the business income for wife? For her own business, 4 lakhs. From rental amount which is invested, 20,000 loss, 3.8 lakh. Sir, why 20,000 is not clubbed in the hands of transferor? No, that's an accretion. If accretion of income is not clubbed, loss is also not clubbed. Very simple. If accretion to income is not subject to clubbing, loss is also not subject to clubbing, as simple as such. Now, so Mr. A 1,36,000 is taxable on house property. Mrs. A 3.8 lakh under house other sources. Directly answer number is A. Option number is A. Remember, here many students might think business loss, they will apply opening capital, that proportionate profit. No, that and all, because this is an accretion. Rent is invested in business. If if at all from business profit is that itself is not subject to clubbing. Same way, loss is also not subject to clubbing. When loss is not subject to clubbing, that loss is accessible in the hands of the, just a minute. Yeah, that loss is accessible in the hands of the wife only. So wife is already having 4 lakhs business income. Business loss from the rented income is 20. Set of 3.8 lakh is taxable in the hands of the wife. That's it. The answer is option A. Next. Raju earned 25,000. Raju earned 25,000 from lotteries. 10,000. Okay, Raju earned 25,000 from lotteries, 10,000 from betting, 50,000 from online games, and lost 5,000 in card games. Any loss in income betting you have to ignore. You should not consider during the year 23-24. The amount of tax to be charged, 30%, 30%, 30%. So 30%, 20% wrong, 30% wrong. 30% of 25, 10, 50. Yes, this is wrong. And the adjustment of unexhausted basic exemption. Remember, day before, this one also covered unutilized basic exemption. 111A, 112. Only these two incomes are eligible for set off. No other income is eligible for set off. In the very first day before yesterday, we did this particular live marathon. In that itself, I told this point exactly. So the answer is C. Next. AMT liabilities, fantastic. AMT liability is not attracted to whom AMT liability does not apply. First of all, AMT is applicable to whom? Individual, HUF, AOP, BOI, artificial judicial persons. First of all, yes or no? Who are not paying tax under 115 BSE, optional, default tax regime, and are having deduction under 35AD, 10AA, 80 QQB, 80 RRB, 80 JJA. Correct? Simple. So, individual AOP, it is AMT liability is not attracted to individual AOP. Actually, that's correct only. HUF, BOI, AJP. Not paying tax on revolt, that is also correct only. Individual HUF, BOI, AOP. Okay, so individual HUF, BOI, AOP not paying tax. This is even more accurate. Individual HUF, BOI, AOP not paying tax under default tax regime. Sorry, just a minute. Not attracted to. Yeah, the question is not attracted to. Whoever is paying tax under default tax regime, for them AMT provision do not apply. For whom AMT will apply, I am not choosing default tax regime. I am not choosing default tax regime. I am going for optional tax. Claiming deductions under 35AD, 10AA, 80 QQB, RRB, JJA. For me, AMT is attracted. Here the question is not attracted to. Please pay attention. AMT is not attracted to those who are paying tax under default tax regime. The answer is option D. That's it. MCQs is over. I think paper is decent. It's not very tough one. Milap, whoever it is, I'm really explaining the logics and then explaining. Okay, you can slowly watch the video also. After another 10 minutes it will be published. You can watch at whatever the speed you want to. Next. Now this is actually resident individual, aged 65 years. He is running his own clinic. Income and expenditure account is given. We solved PGBP previous day before. Just I think yesterday morning I did PGBP revision. I think all these points I've told you. Further, he is also having. In fact, this is a similar problem which is there in the ICAI book illustrations also. Yes. So house property income details were given. House property income, remember we have discussed house property here. No, okay, I think no much complicated information. No much complicated information. 5,000 diesel 48, conveyance expenses include 12,000 incurred. So I think it's pretty simple. Clinic equipment, depreciation calculation details were given. Tuition fee. Remember, by the way, first when you're solving total income, what is the first point you should see? You are required to compute net taxable income and net taxability, both income as well as liability. Provided he is shifting out of DTR, he is not choosing default tax regime, he is choosing optional tax regime. I told you 99% of the times PGBP question will come, and from PGBP that too OTR will be the main which will be tested. Total income is not a complex problem at all. This is basically a simple problem, typically not an issue at all. This is typically not a tough question. I think this is 15 marks only. No? Yeah, 15 marks is the weightage. Then slump sale, straight question. Slump sale, this is a slump sale straight away. Bank loan, you know, all that. I think it's a slump sale. Compute capital gain or loss. It's really easy. It's not difficult at all. Then here you see, this is a TDS provisions applicability. 194J they asked. Ganesh, whose professional receipts, 1.25 crore in the last year. Since it is exceeding more than 1 crore in the last year, 194J is applicable. During the year, previous year, who had multi-phasal activities, examine whether TDS provisions are applicable. Professional fee for consultation, 32,450 on 15th June, including GST. You should always reduce, you should always check 30,000 limit. Fees for technical services 30, royalty 30,000, fees for professional services 30,000, remuneration to director, getting it, there is no limit, yes or no? So 32,450 into 100 divided by 118, this is including GST, remember. So excluding GST 27,500, since it is less than 30,000, no TDS. Next, royalty payment for use of computer, so 2,50,000. Royalty payment for use of computer software by various clients of Mr. Rajesh. Royalty payment for use of computer. So I think 2,50,000, 10% TDS is applicable on this. Fees for technical services related to business. Fees for technical services. For this separate limit is applicable 30,000. Since it is less than 30, no TDS. Getting it? Fees for teaching accountancy to his son. Remember, teaching activity will not come under 194J. Actually, for this, ICAI has to give a clarification whether this real case law is applicable to us or not. Teaching activity is not coming under professional services. Therefore, 194J does not attract. On this question, I am little doubtful because I took an assumption based on some case laws which were there. Getting it? Teaching activity is not subject to GST as per 194J. Getting it? Next, what is the meaning of micro small and enterprises? Investment in plant and machinery turnover. Remember, I showed you the micro PGBP revision. I showed you micro investment in plant is 1 crore, turnover 10 crore. Sorry, 5 crore. Small enterprise means what? Investment in plant is 10 crore, turnover is 50 crore. That's it. They asked a limit. I think this is something surprising. So this question might carry 3 marks. Okay. Mr. Prem has following assets as on 1st April 2023. A machinery costing 4 lakh, which was used for scientific research related to business, and deduction under 35. As on 1st April, he has some assets. A machinery costing 4 lakh, which was used for scientific. Explanation 1 to section 43, subsection 1. Suppose, if at all you are using any asset for scientific research and bringing into business, what is the value? Actual cost minus deduction claimed. Generally 40,000 you would have claimed deduction, so therefore 0. So explanation 1 to 43, subsection 1. A laptop received as a gift from friend costing 60,000, which was purchased. Explanation 2 to section 43. Gift, any asset received under gift or inheritance. In such a case, actual cost to the previous owner minus notional depreciation. 60,000, friend purchased on 1st April 2022, means he used only for 1 year. So minus 15% is the laptop depreciation rate. So 60,000 minus, 40%, laptops, right? 40. 60,000 minus 40% is equal to 60,000 minus 40% is equal to 36,000 should be the value recorded as actual cost in the books of accounts of Mr. Prem. This is explanation 2. A temporary wooden structure costing 70,000 erected in December 23, which was used for business purpose. December 23 means less than 180 days, and wooden structures 40% is the rate of depreciation. 70,000 minus 20%, indirectly half depreciation you will get. Compute depreciation, so 70,000 into 40% into 1 divided by 2 is equal to 14,000 is the depreciation. So for the financial year 23-24, what is the depreciation? So here opening actual cost to be taken as 36. So current year 36,000 into 40%. For this 14,400. For this 14,400 is the depreciation, whereas I mean for which one? This one, for second one. Third one 14,000, whereas first one depreciation is nil, because no, that asset is bought for scientific research, so therefore the depreciation is 0. Next, Mr. X, age 83 years, resident individual, gives the following particulars about his receipts. Gives the following particulars about his gives the following particulars on his receipts. Installment received under reverse mortgage 1043 exempted, it is right away exempted. Interest on bank taxable, remember 83 years, super senior citizen, 80 TTB exemption is applicable probably. Interest on bank by the way, under what? Considering SSC has opted for default tax regime. Default tax regime means no chapter 6 deductions at all. Interest on bank term deposit 2 lakhs is taxable. Interest on bank savings account 45,000 fully taxable, no deductions at all. Pension from central government, any pension amount. Actually here there is a doubt for me. Is this a lump sum pension or uncommuted monthly pension? They have not given. Since they have given a lump sum amount which is not expressed in monthly terms, I assume it is a lump sum. Accordingly 10 subsection 10A, it is exempt. It is exempt. So this is not taxable, this is exempted. STCG on sale of dining table and chairs. Dining table and chairs are personal effects. Remember, dining table and chairs are personal effects. They are never capital assets. Personal effects are those which are movable and are used for personal purpose. These are personal effects. This is not at all liable for tax. Income from dairy farming on agriculture. Dairy farming is dairy farm is not an agriculture income. 50,000 is non-agriculture. So 2 lakh is taxable, 45 is taxable, 50. So 2,95,000 is the taxable. Compute the total income, 2,95,000. Since it is not exceeding basic exemption limit, the tax amount is 0. Actually here many students might confuse regarding this dining table and chairs, and mortgage installment amount whatever received is fully exempted. Remember that. Yeah, Tanvi Singh. Yeah, I'm looking at. Sorry. SSC has opted out. I'm extremely sorry. SSC has opted out of default tax regime. If it is opted out of default tax regime, if at all the SSC has opted out of default, even if it is opted out of na, he will get total income. Yeah. Sorry. Yeah, thank you. I was bit hurry. Thank you. So anyhow, whether it is default tax or normal tax regime, this is exempted. Interest on bank term 2 lakhs, 45 taxable. In income from dairy farming 50,000 is okay. I mean that is also taxable. 2,95,000. Gross total income is 2,95,000 minus 80 TTB deduction will get 50,000 rupees. You will get a deduction, which means 2,45,000 is the total income. That's it. I hope now you're right. You agreed, right? So 2,45,000 because it is opted out of the default tax regime. Yeah, which means it's an optional tax regime. 80 TTB deduction is eligible. He's a senior citizen resident, so 80 TTB is eligible. So 2,45,000 is the total income, and since optional tax regime, SSC is having 5 lakhs basic exemption. Therefore, no tax liability at all. That's it. Here there is a possibility some students might tax this. They might tax even this also. Pension also they might tax it. Remember, pension received from central government, that to remember, assuming that it is a lump sum pension, it is not taxable. Next, Mr. Rakesh furnishes, this is a set off and carry forward problem. No, nothing new. So because I'm not considering it. So because it's very simple problem. Okay. Which are all persons required to file mandatorily return of income as per for loss under 80? Array, we need to file. Who are the SSS? 72, 73, 73A, 74, 74A. Only 71B house property, 32 subsection 1, 32 subsection 2 depreciation loss. Only these people are exempted. Rest all has to file return of income within due date under 139(1) to carry forward the losses. That's it. Answer over. Consequences of non-filing of return of loss in time. If you do not file return of loss in time, you will fail to carry forward these losses. Simple. Yes or no? Moreover, if you do not file return within time, you are liable for penalties, all that. What is belated return and when it should be filed? Very simple. Non-applicability of updated returns. Straight questions. That's it. Tax paper is not so difficult, but at very few places, small crux is there, which is like, I think, some students might confuse on this. So that is very crucial. You have to be very careful on that. That's it. Okay, have a nice time. Thank you. If at all any of you have any objection, just kindly put it as a comment. I will reply. That's it. Okay, I don't want to take up your time much, so I just want to finish it as fast as possible. I finished this less than 25 minutes. I don't want to waste your time. Those of you who are preparing for the tomorrow's day after tomorrow group 2 costing exam, please focus on that. Do well. All the very best. Group 1 is over. Now focus on the group 2. And those of you who have completed group 1 and planning group 2 for the May 25 attempt, we have something called subscription model, smart course, all that. We will give you timetable, we will give you study schedule, everything. You can make use of it. That's it. Have a nice time. All the very best. GST also, I'll ask my faculty to do it immediately as soon as possible.